Oil prices continue to fall as as predictions show the U.S. production keeps coming in higher and higher. Stephen Schork says, well, these prices are actually heading much lower to $30. Stephen, we heard the 3-handle earlier in the year. We even heard a 2-handle earlier in the year, and oil made a huge reversal to the upside. But this time it's going to happen?
Well, we were down to $26 a barrel back in February, and since then prices did double. We got up to $52 through the spring. Now, keep in mind, this was not fundamentally driven. This was the product of one of the largest, if not the largest, short squeezes in the history of oil trading on the NYMEX and on the ICE Brent crude oil market. So essentially, you had a weeding out of the shorts getting squeezed. So now we are in the middle of August, right? We are looking at demand for gasoline, which has never been stronger. Demand for crude oil is at the second highest level ever, just slightly behind the record pace we set last year. But even with this record demand, we still have supplies that today are higher today than they were at the beginning of the season. So this is telling us, even with the best possible demand scenario out there, we still have a glut of supply out there. So when we get into the fall, Labor Day is less than 4 weeks away. What's going to happen once we get into September and October? We're going to see a drop-off in gasoline demand, a drop-off in crude oil demand of upwards of 1 million barrels a day. So the bearish metrics are there. If record demand could not erode the glut in oil, what happens to that glut once demand falls off by 1 million barrels a day over the next 8 to 9 weeks? Now, Charles, keep in mind, as I explicitly went into it in our daily report, the Schork report to clients, these markets don't work in a linear fashion. We were recently at $52 a barrel. Last week, we got down to $39 a barrel. The market is oversold. I'm warning clients right now that we are in perhaps a technical rebound, a correction mode, but that's a near-term
Will that correction take us back to the recent high? Do we have to retest that?
No.
Or in mid-40s?
No. I think we're probably exhausting right now, maybe back up into the mid-40s. By no means can I make a case that we can get back up to $50 anytime through the end of the quarter.
Stephen, let me throw something at you because you talked about the largest short squeeze in history. We came into the week with more scuttlebutt of perhaps of some sort of production freeze. Russia now has seen 5 quarters in a row of negative growth. Saudi Arabia's GDP is barely bumping along. At some point, when do these major producers say, okay, enough? You know, they both cry uncle at the same time. And if that were to happen, couldn't we see another major short squeeze?
Well, right now we are looking at a very large short position again. The speculators are again near all-time highs on their shorts. So the speculator continues to try to sell into this. But the bottom line here, Charles, is to your point, yes, situations are tight in Russia. They're tight in Saudi Arabia. But there was a headline this morning that just came out. Saudi Arabia oil production now at an all-time high. So the Saudis are going to continue to put oil on the market. And it transcends that of pure economics. It is a theological, it is a geopolitical case. It is, again, we're looking at Shia Iran with the imprimatur of the United States on building a nuclear arsenal. Saudi Arabia, as much as these oil prices are hurting it, what's going to hurt it more is seeing Iran with the nuclear arsenal. So Saudi Arabia cannot lower production because they cannot fund that arsenal.
I mean, it's all fascinating stuff, and that's why we love having you on. And we're going to bring you back real soon to talk about this even more. Appreciate it. Thanks a lot.